Welcome back to Iraqi Dinar Alert, your clear-eyed guide in a world of hype. Today we're retackling a massive question. Are Iraqi dinar investors about to get rich beyond their wildest dreams? Let's take a hard look. Every few months, it feels like the internet explodes. New videos, new social media posts, all screaming the same thing. The Iraqi dinar is about to revalue, and anyone holding it will become a millionaire overnight. The headlines are emotional. The language is exciting, and the promise is simple. Buy cheap diners now and wait for a massive, life-changing payday. But let's hit the pause button and break this down, because this is one of those topics where hope, misunderstanding, and internet rumors get dangerously mixed together. So why did people even get interested in the Iraqi dinar in the first place? The fascination really kicked off after the 2003 Iraq War. When Saddam Hussein's regime fell, Iraq introduced a new currency. At the same time, stories started to spread like wildfire. Stories about Iraq's enormous oil reserves, some of the largest in the world, and the belief that once the country stabilized, many people started making a comparison to Kuwait. After the 1991 Gulf War, Kuwait successfully restored its currency's value, and yes, some people did benefit. This led to a very attractive theory. If Iraq gets rich from its oil, its currency must also skyrocket. It's a powerful idea. The dinar currently trades at a very low rate, something like 1,300 dinars to $1. So, buyers imagine, what if it hits $1 per dinar? My small purchase today could turn into millions. But here's the crucial point that gets missed. That assumption completely misunderstands how currencies actually work. Online promoters love to throw around the term RV, or revaluation. They paint a picture of a sudden overnight decision where the Iraqi government just announces a new, higher rate, and boom, everyone holding dinars is instantly rich. In reality, currency values are not just picked out of a hat like a price tag. A country's currency value is a reflection of its economic health. It depends on things like economic productivity, the inflation rate, government stability. This last one, money supply, is the factor that almost everyone overlooks. It's the key. How much currency is actually in circulation? Iraq has issued trillions of dinars. Not billions, trillions. Think about that for a second. If Iraq suddenly declared that one dinar equals $1, the total value of all those dinars in circulation would be worth more than the entire Iraqi economy many, many times over. The government would instantly owe more money than it could ever possibly support. The country's financial system would completely collapse within days. Overnight value increases that make speculators wealthy. No modern economy in history has ever done what these internet rumors claim Iraq is about to do. Now let's talk about the Kuwait comparison, because this is the cornerstone of the whole theory for many people. Supporters always point to Kuwait as the ultimate proof that this can happen. But Kuwait did not revalue in the way people think. Here's what really happened. After the invasion, the legitimate Kuwaiti currency was temporarily replaced by Iraqi printed notes. When Kuwait regained its freedom, it restored its original pre-war currency, and who benefited? It was mainly citizens holding official bank records of their original money. Foreign speculators holding stacks of random cash did not become millionaires. Iraq's situation is completely different. First, Iraq never had a high-value, pre-war currency just waiting to be restored. Second, the current dinar is already the one official currency. And third, Iraq's economy and money supply are vastly larger and more complex than Kuwait's were at the time. So, the story that's constantly repeated is based on a fundamental misunderstanding of history. So, what is Iraq actually trying to do with its currency? This is where a lot of the confusion comes from. Iraq's central bank has discussed something called redenomination. Redenomination is not revaluation. Redenomination simply means removing zeros from the currency to make daily transactions easier. For example, a 1,000 dinar note might become a 1 new dinar note. A 10,000 dinar note becomes a 10 new dinar note. Your purchasing power does not increase at all. The numbers just get smaller and easier to manage, just like what Turkey did back in 2005. So if you hold 1 million dinars before a redenomination, after the change you would still have the exact same real value, just with fewer zeros on your banknotes. This is simple accounting. It is not wealth creation. This brings us to the big question: why do these rumors never stop? The dinar story is so persistent because it has 3 incredibly powerful psychological ingredients. First, the low price. It feels like buying a lottery ticket: low risk, high reward. Second, it's a complex foreign economy. This makes it really hard for the average person to verify the facts for themselves. And third, it taps into the deep-seated hope for financial escape, which is a very powerful emotional driver. Then you add a layer of YouTube creators, email newsletters, and of course, currency dealers who profit every time someone buys physical notes, and you have a rumor mill that keeps on churning. Every single political event in Iraq, whether it's an election, a new oil deal, or a government reform, gets framed as the trigger that will finally set off the RV. For over 20 years, predictions have repeatedly claimed the RV would happen this month, next week, or before Ramadan. And yet nothing like the promised event has ever occurred. So what is the realistic future for the dinar? Could the Iraqi economy improve? Absolutely yes. Could the dinar slowly strengthen over many years? That's also possible, but the key word is slowly. But a 1,000 times overnight jump that turns small holders into millionaires is simply not economically realistic. If Iraq's economy grows stronger, its currency would likely appreciate gradually, just like the currencies of other developing nations. In fact, even a very strong period of economic improvement might only shift the exchange rate by a few percentage points, not enough to transform $100 into $100,000. So let's get to the bottom line. The idea of instant wealth is incredibly powerful. But currency markets are governed by the cold, hard rules of economics, not by internet countdowns and secret intel. Buying the Iraqi dinar is not an investment in the traditional sense. It produces no income, no dividends, and no interest. Its value depends entirely on speculation. The truth is simple: Iraq may rebuild. Its economy may grow, its currency may stabilize over time, but the fantasy of a secret, overnight revaluation making investors rich beyond their wildest dreams just does not align with how real financial systems operate. Hope is understandable, but in the world of finance, understanding is always more valuable than hype. Thanks for watching, and remember to subscribe for more clear-eyed analysis.